Okay, traders, welcome. My name is Nathan Bray. I'm one of the senior account managers and senior trading mentors here at ACY Securities. We're in the studio at ACY, coming to you live from, as you can see behind me, our headquarters here in Sydney, Australia. So looking forward to having a chat to you and presenting you this evening the Quick Start webinar. So joining me, of course, no other than our own senior market analyst and full-time trader who's been trading the markets for quite many years now, is our own Duncan Cooper. Hi, Duncan.
Hi, Nathan. How are we doing? Hi, everybody.
Yeah, fantastic. All right, really good. We'll get to Duncan and we'll utilize some of his insights in just a moment. So just a few people coming on. We're just giving them a few extra seconds. But if I can start by saying that the Quick Start strategy has been developed really to assist people that are either new to trading, currencies or indices, etc., using CFDs, okay, who are very new to it. And what they were after is a way to be able to get started. So we call this the Quick Start method or the Quick Start strategy. So this has been developed by full-time traders to look at what might assist clients in getting started, or more importantly, what might assist people who just want to refresh, who were doing trading themselves, and then were like, okay, now I'm looking to get a little bit more serious with it. And I guess what the Quick Start method is really about, it's about having a strategy that you can implement very easily, that a trading plan in effect that you can follow. So what will be your method to enter a trade? What will be your method to exit a trade? And why, what reasons are you using to enter each trade? And being able to duplicate that multiple times and then gain some experience, okay, the basics when it comes to trading. So it very much isn't this get rich quick, just follow these basic steps. It really is a way to help people get into trading a strategy and becoming a little bit more technically mechanical about their trading. So that will be what we're going to go through this evening. Now, here at ACY, we've got traders with a lot of experience, but we also teach traders from the very beginner trader right through to the really advanced. So one element is our own Inner Circle webinar. So we have an Inner Circle webinar where more advanced or active traders get together and we get to hear from each person about once a month to find out what sort of trading issues they may have or concerns, or how they're looking to tweak the type of trading strategy that they're doing. And all of these questions can be done in a one-on-one with Duncan Cooper and myself. Now, the in-between, folks, you've got everything from different preset education modules. So you've got sort of a 30-part course as well, which I'll touch on this evening. And then the other thing is you want to be able to have access to that in front of your eyes. So all of these different elements, they're available here. It's a free service for all our live active clients. So it's free to register and you can therefore get access to all the things we're going to show you this evening. So enough of my head. Let's share the screen with you right now. So I'll share with you the screen and go through what we're going to cover in this sort of 35 minute webinar explanation of Quick Start. Okay, so folks, keep in mind, I've got a risk disclaimer there in front of you as well. So we won't be providing any personal trading advice. And remember, trading does involve risk, which is why it's important to manage risk, which is why it's important, I guess, to have a strategy that you're going to follow, that you're very comfortable with. So have a moment, look through that risk disclaimer, and then from here, I'll move on and give you an insight on what we're going to cover for the rest of this evening. So Quick Start. So a quick summary of Quick Start. All working lovely, isn't it? So the first thing is we're going to look at why trading with a trend is important. Now, Quick Start is a trend following strategy, which we'll explain to you. It's a very easy way to look for your entries and see trade setups occurring. Okay, so we're going to look at how to identify a trend and also have a look at therefore why trading with a trend is important. And that will be with our own senior market strategist, Duncan Cooper, who I'll introduce in just a moment. Now, the other thing we're going to then do is dive in and have a look at what is the quick start strategy, give you an explanation, and then do a quick demonstration. I'll even dive into the market live now, and we'll look at potential setups that are occurring or ones that may have just occurred, so you can better understand what it's like to actually isolate your trading opportunity while following a strategy as well. And then I guess we're going to cross over to Duncan again, get some insights for him to find out. We'll talk about one of the key principles that traders that are either new or refreshing their trading might find really important, with an explanation as well. So that's what we'll cover this evening. There is a question box there as well. So in Zoom here, you can just click on the chat area and feel free to put through any questions you might have. Okay, and we'll either get to them at the end, or if they're sort of pertinent to what we're talking about, we'll get through them as we go along. So let's get started. Now, the importance of trend, Duncan, could you take us through and give us some insights, I guess, is how to identify a trend? Why is it important? And I guess there's no better person to ask as far as what are the benefits of trading with that trend?
Sure. Well, let me bring my presentation up and we'll get talking about, the market trend and the importance of it. So let me just, I just have to reclaim from you.
No problem at all. Take your time.
We'll just get past the technical aspects or difficulties. All right, so hopefully you can see my screen now.
Yeah, that's all good.
All right, so if you're new to trading, then really, we want to understand what is the trend. Of course, you're going to take them through the quick start strategy and show them a strategy that is all about encompassing the trend and trading alongside the trend. Yeah. And I guess, as I'm bringing my presentation up here, trading with a trend in general terms means that you're trading in the direction, the longer-term direction of where potentially the profit is in the market. All right, the longer moves of the market is with the trend. So that's why we really need to trade in line with the trend and have some way of determining, well, what is that trend? So I'm just going to cover these topics. Some people may have already seen this before, but it's always good to get a refresher. This is just an abridged version of one of the webinars that I do out of the 30 webinar series. So we're going to cover these topics, and the strategy that you're going to show is going to encompass most facets of this. So we'll get into understanding what an uptrend is. And when I'm teaching clients, I usually look at the day chart as the trend and say trade in line with the day chart trend. So that is going to be encompassed within the quick start method. So what is the trend in terms of an uptrend? It is when the market is making higher highs and higher lows. All right. And an uptrend starts when we'll have a downtrend, first of all. Sometimes, or more often than not, a downtrend will end at a level of support. And the first component of a trend change to the upside is when we break above the last lower high on the chart. Then what will happen once we break above the last lower high, we'll put in a higher high here, but we will then get a pullback. So it's worth understanding that if we have an uptrend, it's not just days and days of candles moving up with no pullback. We will have a pullback.
Sure.
I'm sure we've all been thinking the price is going to move up to the moon. And we don't want to take profit yet because it keeps moving up, but then we get 2 or 3 days pulling back against us. That doesn't mean to say the trend's changing, but in a trend, we will pull back and then we will create a higher low, we'll move up,
And Duncan, that could just be profit taking as well, right? Like,
yeah, of course, that can be profit taking from people that have been trading upwards here. Then they're taking profits, which creates some selling pressure, and we pull back. But the key component I want to really talk about with an uptrend, we'll move up to another higher high, then we'll pull back again. And as long as we keep moving back up, making higher lows to a further higher high, we still have an uptrend. So we should be trading in line with that uptrend. Now, if everybody can see my mouse here, the areas where we're trading upwards are these points here. Okay, we're trading up when we know that price is moving back up with the direction of the trends. We're not trading these pullbacks. We're not trying to trade up when price is pulling back. We're trying to trade up when price is actually moving up. And that's what the quick start method will try to highlight for you. These areas on the charts where you should be participating in the market to maximize your potential profit in line with the trend. So that's what an uptrend looks like.
sure.
Now, downtrends.
Who knows, Duncan, how far the pullback could be, right? Like,
that's right. Sometimes we can get, a 1 day pullback. Sometimes we can get a 3 day pullback. But as long as we're getting a higher low coming in, we could get a 2 day pullback in this example. Then we could get 3 or 4, 5 days up. So we never know how many days up we're going to get, but we want to be trading in line with this movement up, in line with the trend. So we're not really engaging on these dips. We're engaging within these upward moves here, ideally. And a downtrend is just really the opposite, which we'll get to in a moment. But we'll maybe just go through a chart example of an uptrend, then we'll get into the downtrend. So on my charts, if you're familiar with my charts, I have these dots on the charts, which signify the highs and lows that I use to determine trends. It's called the support and resistance indicator. So an example of an uptrend, just drawing in the swing, the swing highs and lows here. I'm going to show you where the uptrend actually starts in this example. When we break above this last lower high here, this is where the uptrend starts. One thing I want to get across is this then continues up into an uptrend where we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. That's probably a good month's worth of price action trends. Maybe there's almost maybe a month and a half there. So once we're trading with the trends, those trends can last for a considerable amount of time. So it's more beneficial to be trading with the trends rather than trying to trade against it, especially if it's moving up for the next month. Downward movements can be very limited. And I'm just drawing in the swings here so you can see the swings as well. The fact that we're making a higher high to a higher low, higher high to a higher low, higher high to a higher low, and higher high. And we want to be trading in these. This is where we're buying in these areas here as we're moving up. We're not buying as we're pulling back. We're going to be trying to be buying as we're back in the upward phase on these legs up here. And that's what the quick start will help you do. Be a buyer within those upward movements there. All right. Downtrend, it's just the opposites. So when we have a series of lower lows and lower highs, and a downtrend starts when we do trade below the last higher low. Often we'll stop at a level of resistance, but we move down to break below the last higher low and we form a lower low. We have this rally, and then we start to move down with a downward trend once more, putting in a lower high. And as these candles are moving down here, this is where we want to be selling in this phase here. We may rally once more. We're not trying to sell as these candles are moving up. We want to be selling in the phase, again, when we're moving down as the lower high is forming. And again, that's what the quick start method tries to capture for you, those downward moves there if you're looking to sell and make a profit in a downward move. So a chart example, drawing in the highs and lows. And the downtrend here starts when we, first of all, trade below the last higher low. And you can see then we have a lower low to a lower high, lower low to a lower high, lower low, lower high, lower low, lower high, and lower low. And the swings there, just showing you the overall movements up and down. So we're trading to the downside in these downward moves, looking to execute our trades as price actually is making these downward moves, not trading in these corrective legs, trading these downward moves all the time in a downtrend. Okay. So I think it's important, Nathan, for everybody to understand with trends, there's an ebb and flow. Price isn't always moving in the direction of the dominant trend. We get those pullbacks, don't we?
We do. And we get pullbacks that can vary as well. So we can't sit here and say at any point the pullback isn't going to continue. So therefore, trying to isolate or maybe use a trading strategy that allows you to trade in line with the trend, but also get your timing to some degree right. Is that what you're saying there, Duncan?
That's right. And we've got a question coming in from somebody.
I'll get to that one. Yeah, I'll get to that one if you don't mind when I do the quick start.
All right. So you can get to that when you do the quick start, as long as we can get that question covered.
And yeah, again, Duncan, feel free to jump in too when I sort of get to that, but it might help them.
All right. So I just got a couple more slides on the trend, and then we'll jump into the quick start and you can run through that.
Sure.
All right. So just focusing on the day chart trend. Now, the quick start strategy that you're going to go through does focus on the day chart trend to trade in line with that direction. But I think it's worth, if you've got your own strategy that you're trading with, or you're tweaking, or you're considering, why is my strategy not working? Well, a good component to add into any strategy is trading in line with the day chart trend. And I use this in a number of strategies that I teach is to be successful at trading, we need to trade in line with the higher time frame trends, because from my experience, lots of people don't do that. They're trading against the dominant trend on a lower time frame. So if you're day trading, we'll use a day chart to determine the trend and our trading bias. And as you're identifying trade setups, execute those trade setups on a lower time frame chart in line with the day chart trend. And that's what you're going to be showing in the quick start.
That's right. And I think when we look at that question, even if you want to do it now, Duncan, it sort of answers the question about different time frames there.
Yeah, well, we'll get to that when you do the quick start.
Yeah, perfect.
So what I say to the traders that I teach, if the day chart trend is up, we're looking to buy in those larger upward moves within the trend. And if the day chart trend is down, we're looking to sell in the larger down movements that we're seeing within the downtrend. And, if you are a new trader or you've been trading a long time and you haven't got consistency within your trading at the moment, have a look at what you're doing. If you're not trading in line with the day chart trend, make that change and say, okay, what is the day chart trend? I want to focus on making my strategy trade in line with the day chart trend, because, if you're dealing with a pair that's trending strongly, that day chart trend can last not only for a number of weeks, but for a number of months. And if you're trading against that trend, you're just going to be wrong, and you can be wrong countless times. So why not just focus on what is that day chart trend and stick with the governing trends, So I can't stress that enough. And, as you'll know, so many traders focus on trading the trend of the lower time frame charts without even considering the higher time frame trend and just lose money. They're on their 1 minute charts, their 5 minute charts. They got no idea what the day chart trend is. They think if that 1 minute chart flips up, I should be trading that direction, or it flicks down, I should be trading that direction, with no even concept of where the overall trend has been for the last week or 2 weeks in a long-term move. So I would really encourage people to just change their strategy and approach if they're not doing this, and look to trade in line with the day chart trends.
Sounds good.
All right, so that's the end of my little talk on trend. Is the big factor takeaway is you have to trade in line with the dominant trend to maximize the opportunity. Because as we know, we all have wins, losses. And that's just part of the business of trading. If you think I'm going to have this superb trading strategy and it's never going to lose, well, you're wrong, aren't you? Because we all have wins and losses, and we're not trying to pull the wool over anybody's eyes and say we don't have losses.
Correct.
A trader's going to have wins and losses, and the ability to make profits out of a series of wins and losses is most definitely to be trading in line with the trends.
And being able to admit to yourself that you don't know, you don't have this crystal ball where you literally know what's about to happen too. So I know I've spoken to traders over the years, and they seem to think they've found some magical gadget or some data that, gives them the insight. Whereas I like to think about the market. It's almost like going to a stadium where a football game's being played. There are so many different voices happening inside that stadium. That's what's making up the market. So to suggest, they're all, yes, they may be in two distinct teams, but we do realize there's different people there for different reasons. And so what we're trying to do, I guess, Duncan, is spend more time listening to the market tell you. And the way it sort of tells us is really in a chart form. So that's why Duncan's saying, but the overall trend of the market is telling us that the trend is up or the trend is down.
Yeah, and once we have a trend unfolding, there's quite a high probability it could continue a lot longer than we think. At times as well. And like you're saying, we have wins, we have losses. And, most people, if you interview them, would say, well, I'm putting this trade on because I believe it's going to win. But the true reality is we don't know if it's going to win or lose. But a lot of traders have the mentality that they think this trade is going to win, or why would I put it on in the first place? Why would I put a trade on that's going to lose? Well, the reality is you don't actually know where it's going to win, lose, or break even, but there's always a higher probability for a much more beneficial outcome if you're trading the trends. So, getting to the crux of how you can define that is the key.
No worries. Thank you, Duncan. So I've just shared my screen now. So if we just move on with this notion of saying, I want to trade in line with the trend, be it up or down, but I also want to enter when perhaps the pullback may be coming to a conclusion and we're starting to see that up momentum or trend following momentum kicking back into gear. That is really, I guess, the essence of what Quick Start's about. So it's a great place to start. So let me just give you, I guess, a bit more of an example. Okay, so what you'll see here on Quick Start is this is how your charts will be set up. And I guess to answer the question that was made previously about how there can be trends inside of trends. So what sort of trend are we talking about? Well, if you want to be able to identify whether the daily trend is up or down, which is how we're using this, if you look right down the bottom where I've circled there, that tells you that most recent color of that candle. If it's green, it means the daily trend is up. If it's red, it means the daily trend is down. So it's sort of taken out the need to go in and look at a daily chart and try and judge for yourself based on what Duncan's talking about and explaining there, higher tops and bottoms. Okay, you can literally look down the bottom and this indicator will just tell you the daily trend is up. Then what we want to do is match it with a shorter time frame. In this case, it's an hourly trend. So we're looking at this chart here, and I'll just move forward. So you're literally looking at your daily trend, and then we're looking above that to see the color of the hourly trend. So you'll see if I move ahead, right there. So it's a pretty simple process. You have to look at the most recent hour to get an idea of its trend. So bottom daily, the one above it is also green. Okay, then it's a match. Therefore, you're trading with the hourly momentum, but the longer term daily trend. It's that simple. So we can look at those two. If they're both green, then they both match. If they're both red, then they both match on the downside, and we can look for shorting opportunities. Now, I do appreciate people can use different timeframes. In this case, we're using an hourly chart to match with a daily to look for intraday setups. So intraday trading opportunities that Could last for hours, it could last for days, it could last for weeks, we don't know. But this is what we're looking for to identify currency pairs or other instruments that do have a daily and an hourly match. And it's that simple. So if I move ahead from here, now the second thing. So we've identified the momentum on the hourly matches the daily trend. Great. We've got those two things locked away. Now what we want to do is choose to trigger, and we're just doing it all on the hourly chart. Okay, so we're using this one chart to go across and identify opportunities. So now we've got the trend of momentums, right? Now we're looking to decide when are we going to enter. So the way we're going to enter is look for a trigger in line with the hourly and the daily trend. So in this case, we're looking for a buy. So this indicator here that's been developed, and you'll see it as green dots. If price goes up and touches the green dot, then that triggers you into the trade. So you've got your trading trend following strategy, you've got your momentum right, and then hitting a green dot is your trigger to enter the trade. So if I just move across again, you'll see it needs to hit that green dot there with the arrow. And you'll see it's happened right there. So price went up, that candles hit the green dot. And then what it does is it's showing us that price is breaking out. Okay, so it's a breakout entry criteria. Now, it replaces that green dot with a red dot below it. And you can use that red dot. Some people use it perhaps to put a stop loss. So they'll say, if it puts in a lower low, okay, on the hourly chart, then I'll exit, this position. I'd just exit the trade, take the loss and leave, because I'm sort of saying that this shorter term momentum strategy or trend has changed, okay, and it's putting in lower lows. So that is the reason for that indicator. Now, this is what it looks like as it's happening on a screen. So you'll see down the bottom, daily trend is green. The hourly trend above it is also green, and price has gone up and hit the green dot. So it's green, green, green dot. Okay, so that's where perhaps we could look for an entry, and you'll see I've explained it. It's two really simple steps, but the thing is you can go across 12, 20, however many pairs that or opportunities you're looking to trade, and you can say, I'm just going to isolate the ones that provide today that are matching, and then I'll isolate them further to look for when they actually trigger into a trade. So what you're sort of doing there is following an actual mechanical strategy that is trend following, and it's very simple to do. So any questions about this type of strategy so far, let us know. Because next what I'm going to do is go into the chart. So and just let me move that across. Okay, so what I want to show you now very briefly is, so what happens if we're looking for the opposite? So if we're looking for a sell trade setup or going short. So you'll see down the bottom, I've sort of circled there, is we can see that the daily trend, of course, in this case would be red, and the hourly's matching. Great, we've got the momentum matching the longer term direction. And then what we want to see is price here go down and touch the red dot. So it's red, red, and red, okay, and a green dot formed above it. So if you're going short, this would be how you'd use this strategy and how that would set up. So if we go now into so I'll go in and show you now the examples live in the market. So let's go in and have a look at quick start in the market live now. So we'll start with a buy. So a few hours ago, remember this is an hourly candle. So you'll see here, I'll move this back so you can sort of get an idea of how this has just occurred. So okay, here it is here. So this is the dollar franc. Okay, so we see here the daily and suddenly it's gone from red because it was pulling back to green. Okay, so we're starting to get a match between the daily and the hourly trend. So as I move across, well, it's a bit tricky. So as I move across, we see that turn green. And at the same time, in the same hour as this turns green, we actually see price go up and hit this green dot. Done. Trigger into the trade. So you might say during that hour, whenever you chose to get in, we'll just put it pretty much right on where price went up. And this happened a few hours ago. We may then choose to put a stop below the most recent low point on the hour. And we say that's our stop there. And we could look at that and say, all right, that is risking 43 pips. And right now, the trade from entry, a few hours later, it's right now up 25 pips. So if you were looking at, say, doing a full lot, for example, or you're risking $200, then you're already looking at this and saying, okay, what would be my profit at this stage? Okay, so that to me is a trade that just set up a couple of hours ago. And if we look at perhaps another example, so if we're looking at examples live, I'll quickly take you through the process that takes about 5 minutes to isolate your opportunities. So the first thing you can do, I'm starting at the Aussie yen, which we'll look at as an example. I can see down here, the daily's red, the hourly's red. Therefore, I was looking for a sell setup today. I could go across to the Aussie dollar. Same thing, the hourly's red, the daily's red. So we're looking for a sell setup on the Aussie today. We also just happen, to come at a time where the Aussie has been selling off quite rapidly. There has been some fundamental news come out about not raising rates for the second time in a row. But rather than getting into all of that information, we could literally say, what is the market telling us? What is the trend telling us? What is the momentum telling us? So if I go euro pound is also both red. So I'm looking at it going, wow, euro yen, I'm starting to see a bit of a pattern here in just about 30 seconds. If I go euro dollar, surprise, we're seeing the euro also under a lot of pressure. I could then go pound dollar. Oh, the pound dollar, like the pound yen, is under pressure. Okay, pound dollar is mixed. So in this case, I would see that the hourly is green and the daily is red. I'll just say that's going to me. I'm not going to consider that as an opportunity. If I go New Zealand yen, so if I look at New Zealand yen, it's certainly matching. New Zealand dollar, no, we can't touch that now because it's not matching. So I guess the first step is it's an easy way to identify or narrow down which opportunities you're looking to trade in line with both momentum and trend. Okay, so that might be the first thing that you do. So a couple of hours ago, we were
Got a few questions coming in there, Nathan.
Brilliant. All right, let me get to those. Okay, so yeah, we have this question, first of all, saying, how long is the time frame that we're talking here? There could be a trend within a multi-day trend, and that is absolutely correct. What we're using this particular strategy is trading intraday. So we might be using the hourly trend with momentum, and then matching it, as Duncan pointed out, looking at your higher time frame trend. In this case, we'll use the daily. So daily and 1 hourly. If you want to drop that down further and start trading with shorter time frames, that could be something that you might choose to do. And I guess the statement you're making there, it is very true. But I think the point that Duncan made so well was making sure, even if you are trading a trend within a trend, then make sure you're looking at higher timeframes to gauge that you are trading in line with the higher timeframe trend. Another question here is how to get the indicator. So can NT4 auto place trade once the condition is met? I can't monitor all instruments at once? Well, you can use one of our partners just to answer that question. So one of our partners is called Capitalize AI. So yes, you could program your Capitalize AI to meet whatever trading strategy you want to do. Okay, so yes, that is true. You could program it. You could create an EA, okay, to do this as well. But and I'd say to you that the market has time for you, sir. All right, so maybe it might be healthy if you want to be a profitable trader is to make time for the market too, okay? Because I don't know if there's any magical money-making box, okay? It may require some effort, and it may require, I guess, some knowledge and some experience as well. If you want to program something, then I guess that is something you'd have to do, I guess, in your own time. Now, the question then becomes, I need to wait for the hourly candle to complete and place the trade at the open of the second hourly candle. No, you don't. You don't. As soon as price touches the dot, it's going to be replaced instantly. The 1 hour candle will be live. So if it hits that dot at the very start of the hour, then boom, that's going to replace it. But that is going to be your live candle. Okay, so you could choose to wait to the end of the hour if you wanted to, or you could just enter straight away when price replaces that dot or does that breakout. So that is completely up to you. But at the same time, what do you think, Duncan? Is it from your experience? Would you be happy just to enter?
As long as the two indicators that we have at the bottom, one showing the day chart trend and one showing the hourly trend, as long as the two colors are matching, then you're waiting for price action to cross the color dot to change color. So we don't have to wait for the candle to close, because we could be crossing the dot and then the candle moves down another 15 pips, for example, and then you're going to miss out on those 15 pips. So you don't have to wait for the candle to close. You're just waiting for the conditions to be met, which occur during the formation of a candle. So you don't have to wait for the close. I think waiting for the close just means that you're going to get in later. So then potentially you're not going to maximize the profit of the trade if you're waiting for that candle to close. So no, you don't need to. In my mind, there's no point waiting for the candle to close. You're just waiting for the conditions of the trade setup, which is, does the 1 hour chart trend match the day chart trends? If it does, then you're just simply waiting for the entry criteria to happen as the candle crosses the dot. You don't have to wait for the candle to close.
Perfect. Yeah, that's exactly how that works. So, but in saying that, when you're using these strategies, one thing I would say to you is to execute the strategy over a number of trades. So you can come back, there's no point doing it just for one trade and saying, oh my God, this works, I'm going to make money. It's important with different market conditions, etc., to do a number of trades, and whichever way you're executing it, stick to that. Okay, so you can come away after 10, 20, 30 trades and after a month, for example, and say, okay, am I profitable? Right, that to me is sort of even more important. Okay, then you can say, okay, the next month I'll tweak it. I'll do it in my demo account and I'll sort of make a change and I'll see what effect that has on my trades, things like that, because that's how you're going to gain, I guess, your experience. Now, let's go back. So I want to go back to, say, the Aussie yen. Let's look at examples that have happened in the last few hours or today. So when I look at this Aussie yen, we can see the daily trend is down. The hourly trend's been down for some time. So we're literally looking for price. And I'm giving you the example here where price is red. And what we're looking for is simply for price to come down and touch the red dot. So this has occurred there. Okay, so that was your setup a few hours ago. So if you got in here, as soon as that candle replaced that dot, okay, then that could be your entry. So if we use an example, so I'll say, let's say we got in, maybe we're a bit late, we got in a bit below. So I'll put that red line saying that's where we entered. And then I'll say, where's our stop loss? I'll put it 1 pip just above the green dot for my stop. So as we move forward today, from that entry, we're already seeing at one point prices down about 89, 90 pips, okay, from entry. Okay, so if you're risking, in this case, like 40, 45 pips, you're looking at a trade there where you're almost sort of looking at a 2-for-1 return, which we'll get to in just a moment with Duncan. And if we now move across to the Aussie dollar.
Nathan, that's a good example. If you just go back to that example that you're just showing, that's a good example of not waiting for the candles to close, because if you're waiting for the candle to close there, you can see that you're getting in maybe 5 to 10 pips later. You're just having to, as long as the condition of the trade is met, jump in, because if you wait there, you're giving away 12 pips?
12 pips.
Yeah. So, there's no need to wait for the candle to close. All you're doing there is giving away potential profit of a move down there. As soon as you see the conditions are met, it's time to jump in and take the trade.
And if we looked at day before, so just so everyone's now a little bit more familiar, you can see where the hourly and the daily were red. Price came down right here and it's hit your red dot. So it's entered here, similar fashion, moved well beyond it. And you're looking at, say, at that point, you're looking at a risk of around 30 pips. But if you chose to stay in that trade from yesterday, perhaps it has gone down a total of nearly very close to 200 pips. So then the real question for me is, when we're trading, is finding a strategy you stick to and then starting to understand what you're going to do as far as manage your risk and what you're going to do as far as taking profit. Okay, because it's almost like the quick start here is that surfboard that sort of makes it very easy to stand up on. You're never going to win a surfing competition on it, but it does get you into knowing the basics. But then the real question is, what happens when you stand up on a wave? Like, what are you going to do now that you're standing up? A lot of the time I see traders focusing on just getting to their feet rather than focusing on the actual execution of their plan on how they're going to make money or benefit from it. All right, so if we move across to the Aussie dollar now, Duncan, similar fashion. So we saw the Aussie dollar come down, it hit this red button, and it's moved down from there. If I go across to Euro Yen a few hours ago.
Euro Yen's the same, a good entry there at the top.
So what we are seeing is right here, price came down, hit the red dot, green dot, risking 32 pips. It had moved down 97. So in effect, there's a 3-for-1 trade there in a number of hours. And you can sort of view it all here on, we'll see if there's anything setting up kind of right now. Okay, so this hourly chart on the euro dollar has actually turned red. So you'll see a few hours ago, price came down, hit the red dot, red. So I guess the reason I'm showing you is to just get you used to seeing this type of potential setup. So let's go back and have a look a few hours ago.
Well, there's one there.
Turned red. Boom.
There's one there earlier in the day of today, I think.
Very true. So you've got a setup right here where price actually turned red.
There. That may be, well, there's definitely one there, but that wasn't today. I was thinking that was today, but that's, I think, from last week or early this week.
Very true. So either way, right, you could end up, today it just seems like there's a lot of selling on these pairs that we're looking at. Some days it could be completely the other way around. If we're looking for a buy trade setup, let's say we're looking at dollar yen. We had the Bank of Japan come out a couple of days ago suggesting they might provide some support and changing the way they're dealing with their longer term bonds yields. So we did see the market start to spike, as you can see here. But either way, if you're patient enough, you wait for price to go up, hit the green dot. You may not even know about what the Bank of Japan's doing, but as a buy example, price goes up, hits this green dot, puts a red dot below it, and then from there, obviously, price has moved up. Just to give you an example of a buy trade as well. So looking at both buys and sells, While I've got you here, I'll also show you, yes, the quick start does get you started quickly and gain some experience and learn to follow a trading strategy. But we also have a full 30-part course that I mentioned that is taught by Duncan Cooper. So you can watch all the recordings and go from a more basic approach like quick start to a far more advanced level as well. So I'll just show you up here in the profiles that are all built into your MetaTrader 4. So as I mentioned, you open your live account, which is free to do so, and you get access to all of what is taught in the 30-part course, but you also get access to your screen, all the different trading style setups. So I know a question we had earlier was asking about shorter timeframes. Well, we have a 1-hour momentum trade strategy set up here, and we also have one that's for really short term using 15-minute charts for real intraday setups as well, called the 12 pairs, so pivots. So I'll just give you a quick look at that. So you can see here, it is helpful on a shorter time frame when we're trying to look for things that might assist us in the market. So it tells you down the bottom here, for example, when markets are opening, Frankfurt, London. Okay, it also gives you these pivot levels that are redrawn and recalculated every day. Okay, so all of these things, they're seen as intraday support and resistance levels and can provide some great trading opportunities off those as well. So again, what you're seeing on your screen here, you'll see in Duncan's webinars, and all of the elements about them are taught as well. And you'll have access to from the beginner setups, like quick start, through to the more advanced. So you'll see a whole range of those in here. Now, let's go back to quick start. Okay, so at this stage, I'll just check some questions now before we wrap it up. But as we get to the questions, keep in mind, folks, if this is something that you're after, the steps would be going to acy.com, registering your live account, which is free to do so. There is no obligation, of course, to deposit funds. You can use Quick Start. Your account manager that will be assigned to you will help you set up your Quick Start. So they will book you in for a Zoom meeting, a bit like one we're doing now, and they'll assist you to set up your MetaTrader 4 trading platform so that it works exactly like the one I'm using here now with you. And then you can get access to the 30-part trading course, and you'll get access to all the recordings. So if you're choosing not to wait a whole day for another webinar, you can go through and complete the whole course, which will explain what we're doing in detail. And your account manager can therefore be there to answer questions for you as well. On top of that, we do have a live interactive trading feed. Okay, so that is available for you all as well. So the live interactive trading feed or the Telegram is something that's available for all clients who do have some knowledge, who are active and have some knowledge of trading either regularly or actively, or even have some knowledge of technical analysis. So that Inner Circle webinar, we invite people along, and you get to have your one-on-one talk with myself and Duncan, and get to hear what other traders in the community are actually trading at the time, any questions they have or any concerns they have, or any new tricks that they've developed while they're doing their trading. So whether you're looking at going from, the very basic beginner and then all the way through, we've got you covered here at ACY. And as I mentioned, all you got to do is register your live account, and your account manager will send it all through to you and give you access to all of that. So I'll just like to say, of course, thank you so much to everyone for joining us. But before you go, I guess what I want to do, Duncan, is get you to reclaim the host.
Sure.
And now that we've sort of got a strategy and an understanding of how to enter the trade, can you take us through what you think with, as far as risk reward goes, is something that you found really important when you started trading once you were inside a trade?
Yep. So I'll just get the host back here. All right, hopefully you can see my screen there. I've got the Aussie dollar up in the quick
Yeah,
start.
fine.
So, as a new trader, I can, it's a long time since I was a new trader, but I can remember the days when I first started trading is, you take that first step into the market and you take a trade and it's all exciting. You see a little bit of profit on your account and then you go, oh, I'm on profit. I'm going to click out, because you get all excited about just grabbing that first profit on a trade. But, what we really need to focus on is when you're taking a trade, and I've just highlighted a trade example here on the Aussie dollar, where here was the entry point in this area here. And we'll go through the steps, but the day trends down. This is where the 1 hour chart turned to down. And it's, we've already crossed the red dot, but we have to wait a few candles before both indicators at the bottom match up. And then we can take a trade. So we take a trade in here. Now, what can happen when you take a trade is it doesn't do much for a few hours, or it may go against you, and then you start to stress about things and you just want to click out the trade. But really, when you set your trade out, you need a clear entry point. So here's your entry point, a clear level for your stop loss. That's where you get out for a loss when things don't work out. And then you need a target level. And you really want to set things up so you have a risk reward of at least 1 to 2. I've set this up so that if I'm entering here for a sell, I'm going to exit here for a loss, and maybe I'm risking $100 on this trade. Is I want to be targeting below, have a target so that I can make $200 if I'm, going to be correct on the trade as a minimum. Now we can see here that price action pulls down and it actually goes well past our target. This maybe achieves a risk reward target of at least maybe 1 to 4. So once you start putting on a few trades and you start to see that, yes, price can move a lot further than I think, as you start to gather a little bit of experience on the charts, it's, really set your trades up for at least a risk reward of 1 to 2, because, you're going to have wins, you're going to have losses, and maybe your win to loss ratio is 50-50. You're going win, loss, win, loss, win, loss. If you're only having a risk reward of 1 to 1, then you're going to be at break even, because you might make $100, then you lose $100, you make $100, you lose $100. You're never getting ahead. So you have to have a positive risk reward scenario, and as a minimum have a risk reward of 1 to 2. That would be my first thing. The other thing that I was touching on as I just started the conversation was, as a new trader, as soon as you get in, you get excited, you see a little bit of profit on the account, is just don't click out just because you're seeing a little bit of profit, because the next trade may lose. You have to be able to have the nerve to stay in as you grow a little bit of experience trading, to wait for your target to be met. Because the more that you can wait for your target to be met, that's how you start to accumulate that reward to risk. And that's how you can start to grow your account over time. You're never going to, it's very difficult to grow an account, as I'm sure you're aware, with a risk reward of 1 to 1. Or, you're getting nervous, you're a bit of a nervous Nelly, and you're clicking out when you see the first $10 or $20 of profit. And then, the next trade, you lose 100. You can't make $10 or $20 of profit and then have $100 loss on your losing trades. You have to have a little bit of backbone and go, I'm either going to lose 100 or I'm going to try and achieve my risk reward target of at least 1 to 2. Grow a bit of backbone, be prepared to have a loss. You have to be prepared to have a loss, don't you, to make money when you're trading. If all you're going to do,
sorry, Dan, I was going to say it's easier said than done. A lot of
people
it is
at the beginning.
No worries.
It is at the beginning, because I know at the beginning, I would be starting. I might be targeting 20 pips as a target, and I'd be up 10 pips, and then it starts to pull back a little bit. So I just click out and make 5 pips. But then when I have a losing trade, I lose 20 pips.
That's right.
And you can never quite get ahead. So you just have to learn to, sure, it can be emotional, but that's part of the excitement, I think, of trading as well. All the emotions that flood through you when you first start learning to trade, and you see a little bit of profit in your account. But you really just have to have direct rules that you're going to trade by. So you need, as we've been saying, trend. You need trend rules from a higher time frame perspective. a lower time frame trend perspective, an entry criteria here, a stop loss criteria, and then a risk reward criteria for your target, and have a risk reward criteria at least 1 to 2, as a starting point. Of course, as you grow with experience, you'll be able to develop these skills a little bit further and know what is maybe more achievable in terms of risk reward when you start to overlay support and resistance as well, which we teach. But from a very beginner starting point, just start setting your trades up with a risk reward of 1 to 2 and let those trades run out. And you're going to start to see that, yes, you need a risk reward of 1 to 2 because you're not going to have wins all the time. You're going to probably, I would say with the quick start strategy as a very basic strategy at the moment to start with, it's probably a 50-50 win ratio. Wouldn't you agree?
Sure.
Unless we're dealing with a considerable strong trend, that win to loss ratio is going to be probably like 50-50.
And I guess in saying that, Duncan, once you master the basics of quick start, there are then elements, the next layer of learning. It's like going from grade 1 to grade 2 to grade 3. You start to learn new things that you can then add. So, for example, in today, very basic quick start, it looks like there's 7 trades setting up. But then when you start to take into consideration perhaps news events, key support or resistance levels in the market, which will be taught to you, or whether things are in a strong or a trend with momentum, those things you can start to add on, and you can say, okay, there were 6 opportunities that I saw out of the 12, but really these 3 are the ones I want to focus my attention on. So that would be having an approach where I guess the whole goal when you're trading is you're trying to somehow improve your probabilities to work in your favor. And then, as Duncan's saying, manage your risk reward as well.
That's right. I mean, this example here of the trade on the Aussie here, I'm just putting a line of support. Today's webinar is not about support, but once you know a little bit more about trading and support and resistance, a support level is often a magnet for price action, isn't it? So price often gets drawn down to support. And if that's the case, we could maybe look to this trade entry here for a larger risk to reward. But we also know then when we get a trade set up very close to support that we probably don't want to take that one. But as a very beginner trader, you don't have all that experience yet. So those are some other things that we do impart on people, isn't it, as they're moving forward. Where's the highest probability trade setup that we're seeing today, and where's the lowest probability trade setup that we're seeing today? And without understanding support and resistance as well, you don't have those, things that you could start to sieve out, the poor trades and only take the good trades.
Sounds good. Well, thank you, Duncan. Thanks for all those insights. And also thanks for helping me with the explanation here. And folks, as I mentioned, if Quick Start is something you're looking to get access to or want to go on that training journey with us with your trading, then to access all the 30-part course, to access the setups that you can have on your screen as well, and to get access to our live interactive trading feed, all you need to do, folks, is just go to acy.com and register your live account, which, as I mentioned numerous times, it's free to do so with no obligation to trade. And your account manager, it'll be as simple as booking some time in and then walking you through setting it up. It'll take a couple of minutes. Sometimes it takes a few minutes longer, like 5 minutes, okay? And your platform will be ready to go and you'll have access to all those things we discussed tonight, as well as Quick Start. So thank you very much for joining us. And my email at nathan.bray@acy.com. You can always send me a direct message there. But as soon as your account is registered, you will have contact from your designated account manager. And of course, if you're talking trading and you would like to ask any further questions, you can come directly through to me. I'm available from 1 p.m. Sydney time right through till 10 o'clock at night. So also thank you, Duncan Cooper. And again, thanks everybody for joining us at Quick Start.
Thanks, everybody.